When the markets crash, most people panic. Screens flash red, voices rise, and fear spreads faster than logic. But somewhere in Omaha, one man sits quietly, reading, thinking, waiting. Warren Buffett has seen every kind of storm. Yet, while others rush to sell, he turns another page of an annual report completely calm. How does he do it? How can someone stay confident when billions vanish overnight? The answer lies in a way of thinking. One built not on luck or timing, but on patience, value, and discipline. Buffett doesn't chase the market. He studies it. He doesn't predict. He prepares. And through every bubble, crash, and rebound, his approach remains the same. Buy what's worth more than it costs, and hold it for as long as it makes sense. This is the Buffett Way, a philosophy that's less about numbers and more about mindset. Because surviving a crash isn't about avoiding loss. It's about understanding value when the world forgets what value means. Warren Buffett's approach to investing begins with a simple, timeless principle: buy something for less than it is truly worth. It's a lesson he learned from Benjamin Graham, his mentor and the father of value investing. The idea seems simple, yet few practice it consistently. Most investors chase trends, chasing prices rather than understanding what lies beneath. Buffett's twist on Graham's principle is subtle, but powerful. He doesn't just look for cheap stocks. He looks for quality businesses with strong management, durable products, and consistent profits. A company may not be the cheapest, but if it can grow steadily and withstand storms, it becomes priceless over time. He calls it intrinsic value, the real worth of a company, independent of market moods or fleeting popularity. Patience is key. Buffett waits quietly, sometimes years, until the price reflects the value. He famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Value investing isn't about speculation. It's about understanding what you own, trusting its potential, and giving it time to grow. For Buffett, wealth is a long game, and it begins with seeing value when others cannot. Warren Buffett's greatest advantage isn't intelligence or talent. It's temperament. He remains calm when others panic, patient when others rush, and disciplined when the world encourages chaos. Markets fluctuate, headlines scream, and fear spreads quickly, yet Buffett sits quietly, reading, thinking, and observing. He understands that wealth isn't built overnight. It grows slowly, steadily, and often invisibly, compounding quietly over time. While most chase trends or react to news, Buffett focuses on what matters: the intrinsic value of a business, not its daily stock price. Stories from his career illustrate this mindset. In 1999, when technology stocks soared and many investors were consumed by the frenzy, Buffett stayed on the sidelines. He didn't react to hype, he didn't give in to fear, and he didn't try to time the market. When the bubble burst, his calm became a powerful advantage. Buffett teaches us that investing is as much about controlling emotion as analyzing numbers. Patience, rational thinking, and a long-term perspective create opportunities where others see only risk. The Buffett way begins not with spreadsheets, but with a disciplined mind capable of remaining steady when the world moves frantically around you. Warren Buffett's approach to wealth isn't flashy. It's quiet, disciplined, and built on simple principles repeated over and over. The first rule is clear: never lose money. The second, never forget rule number 1. It's a reminder that protection of capital is the foundation of growth. Buffett also emphasizes understanding. He invests only in businesses he truly comprehends, ones with products, services, and operations he can evaluate confidently. Complex strategies or speculative bets are avoided. For him, clarity and knowledge are more important than speed or excitement. Another guiding principle is patience. Wealth is not a sprint, it is a marathon. Invest in strong businesses and allow time to work its magic. Compounding, Buffett believes, is like a quiet engine running in the background, invisible day to day, but unstoppable over years and decades. These rules aren't complicated, but they require discipline. Buffett's consistency shows that real wealth is built slowly, thoughtfully, and with careful attention to value. It's a mindset as much as a strategy, one that rewards patience, understanding, and the courage to act when others hesitate. One of Warren Buffett's most powerful tools isn't found in a spreadsheet or financial news headline. It's time. Combined with patience and smart investing, time becomes an unstoppable force through compounding. Compounding is simple in concept. Your money earns returns, and those returns earn returns in turn. Over years and decades, small amounts grow quietly into something significant. Buffett often describes it as a quiet machine, working for you even while you sleep, unnoticed but relentless. He began investing in his youth and let compounding do the heavy lifting. A modest investment, held steadily, can double every 7 years at a 10% growth rate. Over decades, this simple principle turns small sums into fortunes. Buffett's wisdom is not about rushing or chasing trends. It is about staying the course. The market may fluctuate, crashes may come, but compounding rewards those who remain calm, patient, and consistent. In essence, the Buffett way isn't just about picking stocks. It's about respecting the power of time, giving your investments the opportunity to grow quietly, and trusting that slow, steady progress will eventually surpass the frantic activity of those who chase instant gains. In a world obsessed with speed, short-term gains, and constant news, Warren Buffett's approach feels almost radical. He reminds us that real wealth isn't created overnight. It is the product of patience, discipline, and understanding. Buffett's habits offer lessons for anyone, regardless of how much money they have. Read daily. Stay curious. Focus on businesses and industries you understand. Ignore the noise. Avoid speculation. Let your investments grow over years, not weeks. The modern investor can take these principles and apply them quietly. Instead of chasing trends or reacting to headlines, concentrate on intrinsic value. What something is truly worth, not what others claim it to be. Think long-term. Consider the decades, not the day-to-day fluctuations. Buffett's methods show that emotional control matters as much as financial skill. Fear and greed drive most mistakes in investing. By cultivating calm, rational thinking, and patience, you can navigate uncertainty more effectively than the majority. Ultimately, the Buffett way teaches us that wealth is built slowly and steadily. It rewards thoughtfulness over haste, clarity over complexity, and a measured mind over reactive impulses. Even in today's fast-moving markets, these lessons remain timeless. Warren Buffett's approach to investing isn't about quick wins or chasing trends. It's about patience, understanding, and trusting the quiet power of time. By focusing on value, thinking long-term, and staying calm when others panic, he has built wealth that lasts decades. You don't need to be Buffett to follow his principles. Start small, stay disciplined, and let compounding work quietly in the background. If you enjoyed this breakdown of the Buffett way, subscribe for more calm, insightful lessons in investing, wealth, and smart decision-making. Let's build lasting wealth, one thoughtful step at a time.